So yeah, guys, this is Miroslav. I decided to try, instead of writing an article, to uh, make a recording for the Q3 earnings season. I hope it's gonna be relatively okay, because I'm pretty nervous and it's pretty weird to talk on a mic like when I'm alone in a room. We're gonna find out. So uh, this is my portfolio today. We're gonna look at the first position, which is American Coastal. Uh, American Coastal had some pretty great earnings for Q3, 53 cents per share EPS. The running joke is that the only one analyst that is covering American Coastal is really off, so they use it in their presentations. So yeah, great numbers. What was happening? The biggest event on American Coastal was the two hurricanes, Helene and Milton. Uh, yeah, you can see it here on the stock price. I think this is Helene, and this is the nervosity that was in the markets because of Milton. Uh, I have prepared map of Florida. Yes. So Helene went roughly here on a north south of Florida, which is good because the main cluster of property that is insured by ASIC is here on southeast around Miami. So Helene that went this way, and Milton that hit mostly Tampa and went on the northeast or east, and kind of disappeared in the middle of Florida. Didn't hit the property that is insured by the American Coastal too much, so the loss was like 10 million, and American Coastal will probably make like 75 to 85 million profit. So it was like a scratch compared to the nervosity that was on the markets in the time of the hurricanes, and it was quite a ride to be a shareholder of American Coastal this year and this hurricane season, right? So they also had investors day like last week. Investors day. They announced 50 cents per share dividend. They're gonna pay it out in January 2025. But they said it's they like about about returning capital back to shareholders is it's gonna be like maybe sometime dividend, maybe sometime they're gonna make like some buybacks. It's gonna be case to case. It depends on the situation, and if there's gonna be like a major hurricane that's gonna hit the property and so on. They're also gonna expand on a new type of property. If you know American Coastal, well, they are insuring like a specific segment of market of property, and now they're gonna expand, so it's gonna increase like the premiums they take yearly. So they're gonna grow the business, and they also announced that their guidance for premiums for 2025 is between uh, 290 and 320 million of premiums, and I made some napkin math on that, and if they're gonna make like 305 million and the combined ratio will be 60%, they're gonna make earnings per share like $2.5 per share, so like the stock trades at 14, so that's like sub 6 price to earnings ratio. So it's still undervalued in my opinion. Um, I think the combined ratio is realistic in case like no major event, because we had two like smaller hurricanes this year and the combined ratio was I think 57, 58. So yeah, uh, I'm still bullish on coastal, happy shareholder and so on. And we're gonna move to uh, second position, which is Versabank. I don't have much to say about Versabank. I don't have it in my portfolio for too long, and the earnings are on 9th December. But I had time this weekend, so I decided to record it today, on 7th. But I don't expect like I don't like the standard routine earnings. I expect that's what I expect. Uh, no surprises, and I also have a note here to say that the CEO is now like riding around some conferences for investors, and he's trying to like sell Versabank to investors, so the price shares goes up, and it went up like in the last 3 months because of this. So yeah, that's pretty much all about Versabank. Still pretty cheap, and I think great quality business. We gonna see. The next is the new position, Finance of America. I'm gonna talk about them more on the end of the video because it's a new position, new thesis. Formos, my favorite my favorite cosmetics maker from Poland. The story of this stock is growing revenues but smaller margins, and that means that the year-on-year profit is roughly flat. Uh, the smaller margins are caused by combination of pressure on wages in Poland, and like some other local factors in Poland, which you can see on like other companies like let's say Auto Partner and so on, and also by like expenses on their new production capacity of new dermacare products under the brand of Celebic. I can't really tell like what's the ratio, when they will stop like spending money on this Celebic capacity, how much their margins are gonna increase. I can't really tell from the numbers or the information I have about this company, but I still pretty positive. We can see other like news about the fundament for us. They're gonna go to the main floor of Polish stock exchange from the second floor New Connect to the main GPV. This should be bullish message. It's gonna attract new investors and add some like transparency to the company, some more like regulations and so on, more regulations or more like supervision. So this should be build more trust and so on, and have a positive impact on the stock price. And also they are still making buybacks. They have like 22 million Polish zloty fund, and they are making they buy back stock from it. I think they could like put the pedal to the metal, let's say, more, and buy some more. But I'm not like an expert on this process, so maybe I can't really tell. I'm afraid that the price of the stock will like explode on some moment, maybe on when they go to GPV, maybe when they like have a year-on-year increase in their profits, and the stock price will go up, and they will realize the buybacks on like bigger price. Therefore, they will buy a less amount of stocks. So like they will be like less return on buybacks. But uh, like they can still buy a lot of stocks. So I'm pretty bullish on Formas. I think that it will explode someday. I think that the fundament got really better than when I bought in January this year, and we're gonna see. So I take like standard super great earnings, 27% growth, both on revenues and on earnings. Like there's not much to tell. This is really great growing business. The only problem, as you might know, is they have like this stuff with European regulators that have they think that their product Selectope might be like hormonal disruptor or something. Look it up, and they there's a potential of banning the application of Selectope their product in the European Union, which costs like the price the low multiple that is on this stock, and I think there's a much upside. They have like a hearing in middle of 2025, and we're gonna find out if the European Union is gonna allow the use of Selectop in Europe or ban it. This is gonna affect the price. Either it's gonna like double or more, or it's gonna fall like I don't know 30-40%. In the case it's gonna explode, everything is great, everything is beautiful. If it's gonna fall, like I think I might buy more, because if you look at the they fundamentally sell like 5% of revenues in Europe. They sell mostly in Asia, and only the application of Selectop in Europe will be banned, if I'm correct. So they will like have most of the revenues still from Asia. I think that the risk of like that the Asian agencies will look at Europe and say like we're gonna copy that is pretty low, and I also think that the probability that they're gonna allow it at the end of the day in Europe is pretty high. I have it like 2-to-1 ratio, like two they're gonna allow it, one is that they gonna allow it, but we're gonna see. But I think like price, like risk reward ratio on this stock is pretty good for me, but it's a little risky, do on research. They also switch CEO. I don't think like this is too important because the previous CEO it's like a hard manager. It's not like an insider, with like huge skin in the game. But this new guy, I looked at some interview. Seems like pretty level. I've or like relatively. How do you say? Seems okay, and he bought like pretty huge amount of shares, and there'll be some other insider buys in iTech, which is positive sign. Yeah, we gonna see. Mid 2025. That's like the major event. We gonna see. Tasma, they report like every half a year, so they didn't report it. You can read why I bought them and why I sold Duratec as my Australian horse in my previous article. So look it up if you want. Velké skupy ani ne. Yeah, they killed it in the Q3. Margin for first half of the year was 8.9%, which was already great. And now, after they reported, their margin for first 3 quarters jumped to 11%, which means they Q24 margin, if I am correct, should be like 18, 19%, like, which is like great. Uh, I have like a little question mark about if it's sustainable. This is like my major, yeah, let's say yellow flag on this stock. If the margins are sustainable, but if they're gonna make, let's say, 26 to 29 million euros this year with market cap of 96 million, this means that it sells around 4p, so I don't know how much, like, relatively, let's say, mid-quality businesses at this price do you know. Because I don't know much, and if you know, write me, because I would like to buy some stock in it, you know. So yeah, and also they're gonna finish the new capacity in Latvia. I don't know. They're gonna finish new capacity, which should add like 50% revenues. So yeah, this is about like keeping the margins or don't decrease too much, and about like the growth of revenues from the new production capacity. Yeah, so we're gonna see. Spirosoft, Polish software. Uh, Previous quarters they had like problems with margins and with like their bench of programmers, because they are programmers. They didn't have like work, but they wanted to keep them, so it affected their margins. But now their margins like skyrocketed. They got better. They like uh, got some new work. They have some new contracts with BBC and so on. So they are back in the game. Like the cycle seems to be, going up. Hopefully they can keep it up. And if they can keep it up and deliver like 12.4 million zlotys profit like this quarter, the stock sells at like 10 to 12 price to earnings. So pretty cheap and a growing business. Not the like most monopolistic business, but I like them. I don't know any better business. I want to keep them. Maybe I will sell them sometime in the future if I come up with something better. But for now, I'm pretty happy with them, and much more happier than previous quarter, which was like worse, much worse. XTPL. I don't know if you know XTPL. This is like a Polish growing company losing money, like a startup investment on my part, like small side bet. Uh, uh, I don't think it like matters to show numbers too much. This is all about. They have currently they have some new prototypes in testing. If the customer is happy with the prototypes, they will buy them. This will like the revenue of XTPL will grow like skyrocket. Uh, this will like float into the margins, into the profit. They will turn profitable. Uh, and at the moment when this company is consistently profitable with high margins and their quality of business, it's gonna be valued at big multiple, and it should be traded at much like higher valuations. Mm. This is like a multi-bagger or bust case. Uh, we gonna see. I like. I probably entered too early into this position, because they currently made some new issuance of shares to raise some capital. At lower valuations, I entered at 125 zlotys per share, and they made the new issuance at 93 zlotys per share. So Uh, yeah, I hope they're not gonna mm, issue again because I don't want to be too diluted. Yeah, so I hope they won't need much new capital. We gonna see. Okay, so now to talk some more about the finance of America, which is gonna be great because I like wasn't too successful with describing it when I made like the Czech version of video and I have to talk in a foreign language. Well, now I'm gonna try and then I'm gonna like show you the sources that I got and you can research from there. So Finance of America is a company that make a reverse mortgage. So typical customer of this company is like 70 years old widow, you know, and she's in a situation where her husband died and she lives in like this big house, big expensive house, and she can afford like her lifestyle, her cost of living, basically. So she collects some security check because she's America, but it's not enough. So now she's like in this difficult position. What she's gonna do? One of her like what she can do is that she gonna see like a commercial on TV with Tom Selleck here, and he's gonna show her a possibility of making a contract with Finance of America to reverse mortgage her house, which basically means that they're gonna pay her like $1,500 per month and buy some equity with some yield in her like house, and it's gonna increase as they're gonna pay her their like percentage in the house. But because the price of the houses goes up, theoretically it takes like 30 plus years to run out of the house. And when the senior citizen, when he's gonna pass away, they're gonna sell the house, and the Finance of America is gonna collect the, their share in the house, like they're gonna collect when the house is sold. They're gonna collect the dollars with interest because they like they lend the widow the money with interest, and they're like bundling it. Maybe I don't know. I have to still research this stack. There is it's like super complicated case. I have to look into it more. So if you want to like hear from someone with much better education, have much better knowledge, just look at this source when I found the Finance of America at Unemployed Legion Value Substack. It's behind paywall, but you know there is a free trial and you can pay $5, and I think it's like super worth it. And there's a full version of this video where he describes the case, may have some like spreadsheets, and if he's right, the the Finance of America is selling at like ridiculously low valuations because they are at like 200 million valuation, and if value degen is correct, they should make like 300 in next year and so on. So yeah, we gonna see this is like a 10 bagger of other bust case. I like don't invest in these kind of turnover situations too much. I more like find like some bizarre but profitable growing businesses for cheap valuations. That's what I like. But this case it seems so undervalued, and the risk to reward ratio for me looks so great that I decided to just bet big and gamble a little. I'm gonna see. So yeah, Finance of America. Uh, So yeah, this is my portfolio. On the left, this is after Q2 of this year, and this is after, on the right, it's after Q3. Uh, there's been some changes, Versabank, ASIC, and Tasmea are like growing very a lot, so they are the main growers on my portfolio. So yeah, I saw Duratec, bought Tasmea. Uh, I wrote an article about it. You can read it. Uh, then I sold Kinsale Capital in roughly of time of Hurricane Helene at the end of September because I found Wilkescu pienine. So like I don't know 80-90% of the capital from sold Kinsale I'll put into Wilkescu and the rest into ASIC because Kinsale it's a great company, but in the context of my portfolio, it's trading at like 30p compared to like single digit p of most other stocks. So I decided to sell that, and unfortunately, I had to sell Technion, which was like really my favorite company. With like I maybe was a little too much unhealthily sentimental about the stock, but I really like the management, I really like the business. And I also had to sell it on like the low end of cycle and with like 30% loss. But it's again in context of my portfolio, it is like on a higher end of valuations, and I wanted to just put some money into Finance of America because like it's such a good case, I like decided to do that, and I also sold roughly a third of my position in Tasmea in my Australian bet to have some more money to put in Finance of America. So that's what I did. Hopefully it was a good decision. You're gonna see. I also have like a note here, you know, uh, because if you've been reading my Substack, it might seem that like trade a lot, and I try to be like a long-term investor, but I also have been investing for roughly 3 years, and you know like my strategy is to just have a concentrated portfolio, top heavy, with with like 10 best cases that I can currently find on the market, you know, and I am still coming to like new tickers, new companies. I research all of the time, and when I found something new, I just aggressively sell and buy this new stuff, and just don't care too much. But just try to make the best decision possible. And if I can find company that is just cheaper, better, and growing more, I just sell and buy position in the different stock. Yeah. So I hope in like in the future, uh, I will have. I won't trade like this much because I will have just the best stocks in the market, and even if I come up with 30 new companies, they all gonna be like worse than the stocks that I already own. So yeah, that's what I try. Okay. So yeah, this is my today performance. Uh, last 3 months it really grew. It's like psychologically great to see some green, but I try not to care too much and focus on the fundament. Like this year, I will probably be the S&P 500. That's like really highly valued with all the AI stocks and semiconductor and Nvidia and so on. And the valuations are like really high, maybe slash little bubbly. We gonna see, in the future. But yeah, I just think like I have this great portfolio of like cheaply valued, growing, relatively good quality, or in some cases really good quality companies, and I think it has a potential to beat like 10% that the S&P 500 gives. You know, we're gonna see in the future. And if you have like some positive or negative criticism, but like constructive criticism, open, write me everywhere you can on Twitter or Substack. Uh, you know, it's always great to exchange ideas and so on. So yeah, uh, I think this will be all, and thank you. Write me up, like, subscribe, whatever.